Well, joining me to talk more about Tencent Music is Saruhan Hatipoglu, CEO of BERI and CGTN's Global Economics Analyst. Welcome back to the show.
Hi, Rachelle.
So as we look at where Tencent decided to list, what made them choose New York over Hong Kong?
Well, I don't think there was really a lot of choice for them, because if you look at the Hong Kong and Asia in general IPO market, that has been slowing pretty obviously for the past 2 years or so. So they wanted to go and be near global peers. They want to be near a market where it's highly liquid, so they could have good valuations. But I think one of the main reasons that they went there is the difference in business or investing culture between Hong Kong and New York. In New York, investors are looking, and if you can sell it, of course, to long-term prospects of a company. Can this company make profit in the future? Whereas in Hong Kong, investors are more interested in show me the money now. Where's your stable cash flow? Do you have it? Are you paying dividends? And they're paying less attention to long-term prospects. And when the situation is such that you're a tech company and you're focused on future growth, I don't think there was that big of a problem for them between Hong Kong and New York. They just chose New York.
And it's interesting because Hong Kong was actually on track for the world's top spot in terms of exchanges, in terms of the money raised in the stock market flotations this year. But some of its newer listings didn't do so well. How much is that going to affect whether or not companies still decide to list at the same pace in Hong Kong as they have been?
I think that's a great question. They're trying to change certain regulations and become more attractive. For example, dual-class shares. Now they're allowing the companies with dual-class shares to list in Hong Kong. There are some other things that they're doing, but the bottom line is we have a slowing economy in China, we have a slowing economy in the region, and that's going to show, that's going to have its impact on the IPO market. If you look at the numbers, I look at actually 2 years for a pattern, you're seeing that 2/3 of companies that have $1 billion or more in assets that have IPO'd are below their share opening price for a 6-month period. You extend the time period to 12 months, that ratio goes to 75%. So they're feeling the impact of slowing economy. And New York market will too eventually, but at this point, it's becoming a little more difficult for them to attract.
Now let's talk more about Tencent in terms of this IPO. A lot of people were waiting for it. It was delayed for a while. What was the main cause of the delay?
Ooh, they didn't like what was going on in October in the global markets in general, but definitely in the United States. They've also cut back their forecast. They were planning on about 20 to 25 billion, maybe a little more in terms of fully diluted share opening. Came about, if they were to fully dilute it, it would be about 20 billion or so. They tried to raise 2 billion. That was their initial approach, and they were able to raise 1.1 billion. So curb their enthusiasm, but I think it was a good day for them, because nowadays you don't know what the market is going to act. We're seeing a very volatile period. It could have been a very bad day. They finished 14.9% higher, so that was a good choice, and they got a little bit lucky too.
And so in terms of risk, obviously the legend of Spotify not doing so well, how big of a risk was this?
It was a big risk, but they had to take this risk, because if they waited longer, the economies, we talked about it, in China and in the region is slowing, but the US is going to slow down too. And investors were going to look at it as, okay, how much more are you going to reduce your price? So I'm going to buy your shares, or I'm going to sit it out. So they had to make the strategic call. I think they made the right call. If today is any indication, they made the right call. But it doesn't mean that they're okay, because there are some long-term challenges to their businesses too.
Now, we know this has been obviously a very big year for Chinese tech IPOs. How are they faring overall?
Well, it's interesting, because in terms of, if we look at the US market, if you look at the US listed IPOs this year, their prices from when they opened increased by 6% or so. If you look at US listed tech IPOs, they gained about 7%, but Chinese listed IPOs lost more than 10%, about 13% or so. So that's a big issue. However, the number of Chinese listings in New York so far has been higher than the past full 8 years. So the cake is getting smaller and smaller with the Hong Kong and China as well. But the slices that the New York side is getting is becoming larger and larger. So it is interesting to see what is going to happen at this point. They've, again, made the right choice. But again, short-term and long-term challenges are still there.
All right, always good to have you on. That's CGTN Global Economics Analyst Saruhan Hatipoglu and the CEO of BERI.